What's up, guys? Stas here. So listen up. We're going to go over 5 oversold stocks that I'm looking at right now. We're going to break down the charts, key levels, where I'm looking to get in, what I'm looking to do in general. So, yeah, you guys know the drill. If y'all find value, hit the like button. Feel free to subscribe if you want. No pressure. It's free, though. And don't forget to also get up to 16 stocks from Moomoo, each up to $2,000. Link down below, or you guys can simply go to staserfest.com/Moomoo. We'll talk more about the details later. And with that being said, guys, cheers. Let's dive right into the video. So right now it's about 11:30 a.m. when I'm making this video, and mind you, all the indexes pretty much, except for the Russell, which is at break even, all of them are in the red. We have the NASDAQ down almost 1% right now, down 0.9% to be exact. Let me pull it up and show you guys. Let's see. Yeah, triple Q's down 0.9%, and it looks like as of now it is getting rejected at the top of this wedge. You guys can see right here, we're having a tough time breaking above 375, 380, which in the very short term is not the best sign for the bulls. And on SPY, if I pull it up, this is down, let's see, about 0.5%, down $2, also getting rejected as of now at the top of the channel here. Not channel, but wedge. You know, that's what I meant, wedge. Either way, we're having trouble breaking out, at least as of now. We also have the Dow Jones down a little bit, but pretty much at break even. So really, the red right now is in tech, the S&P, as the Dow and the Russell, they're pretty much flat, and we have the VIX up right now over 2%. So let's dive into this. Let's break down these 5 stocks that I'm looking at, and all of these are in beaten down sectors, if you will, right? Number one, we have J&J, which maybe is not that being down compared to other stocks, but it is down a good chunk from the recent highs from earlier this year. We can see in the beginning of the year, this stock was at $180 per share. Then it went all the way down to $150 by the end of March. I mean, geez, that was a $30 drop, almost 20%. So it almost got in a bear market there. And since that point, we've been recovering, but we're still down from the beginning of the year around 10%. Keep that in mind. And this is pretty oversold, in my opinion, the way I'm looking at it here on the 4-hour time frame, as we're more towards the bottom of this channel. And do you guys see what's going on right now? We're holding this channel, are we not? We're making higher lows, and we're actually slowly digging ourselves out of the hole that, well, J&J got itself into in the first 3 months of the year. Again, you know, it started off the year at 180, got down to 150 by March, and we've slowly been climbing out, and right now we're bouncing off the bottom of the channel. Again, we're holding a higher low. We're starting to break above the 50 SMA here on the 4-hour chart, and we're actually up on the day. So I'm just looking to see here if J&J could end up playing in this window again. Will it now, since it's holding the bottom of the channel, right? Will it now start to make a move back towards the top of the channel? We're talking mid 160s, high 160s. That's kind of what I'm waiting for right now, what I'm looking out for on J&J, for it to make a move sort of like this, right? And of course, this is not GameStop or AMC or other crazy growth. Well, those aren't growth stocks, but it's not like an Nvidia or, an AMD or something. This is J&J, guys. Not a bad company, but it's a slow mover. It takes time. So this might not happen in a day or two. It won't, actually. It definitely won't, in my opinion. But over the course of the next couple of weeks, months, could we start to get back towards, 170, 175, 180 even? For sure. And that's why I'm looking at this kind of as more of a swing trade here, shorter to midterm swing trade, maybe a couple weeks to a month or two. That's the way I'm looking at Johnson & Johnson right now. So the next one is CVX. Let me pull it up and show you guys. CVX is up 2% so far on the day, which is pretty good, as oil in general is doing well, and we have XLE, which is an ETF I own, that's also up. So energy in general is doing very well, and you guys know this is also a beaten down sector, right? Energy in general has not done well that much, or has not done that well recently. Well, now it's almost going green on the year. But look, XLE to start off the year was at $93 per share, and it was at, 70, 75, coasted at about $80 for a little bit. And now it's starting to claw its way out of there. But XLE Energy has not done well this year. Same with financials and, some healthcare names. And they're slowly starting to turn around. If we go back to CVX, let me show you guys this. CVX now, it's clearly above the moving averages. We have a golden cross, all that good stuff. And to me, guys, we're still pretty oversold in the grand scheme of things. We are one breakout away really from 172. And if that were to break, we could probably be start pushing the 180s, high 170s, low 180s, totally possible, guys. So the way I'm looking at CVX is it's slowly starting to reverse, still beating down with more upside momentum to the upside, in my personal opinion. Another energy name is Occidental Petroleum, which we know Mr. Warren Buffett, the man, the myth, the legend himself, he loves Occidental Petroleum. This is one that's also on the move today, up over 3%, and it's still pretty beaten down in the grand scheme of things, and it's on the verge of breaking out. You guys can see we're above the moving averages. We have a golden cross. We've had that for months at this point, weeks actually, and really we're one breakout away, 66, 67 bucks from a huge leg up. From that point, we could start pushing 70, 75, maybe even higher from that point. But overall, where my head is at right now is, all right, I think energy set to rally, and I've been saying that for a couple of weeks now. I've been buying XLE, so Occidental Petroleum could be around the corner. A rally could be around the corner, obviously. Chevron as well. So that's why I'm watching these guys, as in the grand scheme of things, over the past couple of months, they're still arguably beaten down depending on who you're talking to. And Zion Bank Corporation, let me actually pull this up. And before we actually do pull this up, have you guys gone up to 16 stocks yet for Moo? If not, use that link down below, or simply go to stocksurfast.com/Moo. Open up your account and fund it with at least $100. Once you do that, you get 5 stocks right off the bat, and fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys. Once you fund your account at least $5,000 for a limited time, on top of those 15 stocks, you also get a free share of either Tesla stock or Google stock, which makes this promo a no-brainer. So get on it, use that link down below. And now let's continue on here with Zion's Bank Corporation, which you guys probably remember. This was one of those regional banks that got destroyed about a half a year ago. Do you guys remember that? Crazy how it's already been 6 months. But back in March, I believe, February, actually no, it was in March, whatever the heck it was, yeah, right around here, early March, we saw Zion take a hit from $50 a share down to 25, down to 18, which was a massive drop. We're talking about a 70% drop, and now it's slowly but surely been reversing, right? And keep in mind, this is probably one of the more risky names, probably the riskiest name on the list for today. So keep that in mind. And please, when it comes to trading, guys, trade at your own risk. Do your own research. I'm not telling you to buy these. I'm not a financial advisor. But to me, this is up 6.5% today when I'm making this video. It looks like it is breaking out. Does it not? Look at this. If I draw this out, we're starting to break the wedge. We're taking out the highs from a week or two ago. We're above the moving averages. This to me looks like, yeah, sure, it might not go to $60 again anytime soon, if ever. But in the short term, it's at 36 right now, 37. Could we go back to 40? Sure thing. In my opinion, we can. And could we break 40? It's totally in the cards, right? So Zion is oversold. It's starting to reverse to the upside. I'm liking it. And another one that's really oversold, probably the most oversold on this list, it is JP Morgan, ticker symbol JPM, which isn't really reversing back to the upside quite yet, but it looks like we're slowly finding support, at least in the short term right now, at 143 to about 144 bucks per share. That was actually the high from the beginning of this year, from January all throughout pretty much the end of June. Then we broke out of that. We got to 160. Now we're back to 145, guys. We're hovering right here. Again, like I said, pretty oversold. So let's see if we can get a clear-cut break, I'd say above 147. Let me set my alert at 147 right now. Mark is that we're above. And if we do start cracking above that point, especially 150, guys, JPM to the upside, the reversal to the upside would really start to take place at that point, at least in my personal opinion. What do you guys think? Let me know your thoughts in the comments. So yeah, those are the 5 stocks: J&J, CVX, Occidental Petroleum, OXY, Zion's Bank Corporation, ZION, and of course JP Morgan, JPM, which is what we just talked about. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Feel free to subscribe. It's free. And follow me on Twitter at Stas Talk Stocks, or just type in Stasserfest. I'm getting way more active on Twitter, so make sure you guys do that. And with that being said, I guess that's it. Cheers. I'll catch you guys in the next video.